everybody's having a nice Avalanche Summit and enjoying Buenos Aires. It's really great to be here with everybody. I have two fantastic guests here. I just want to start by obviously giving you both the opportunity to introduce yourselves to the crowd. Kelly, why don't we start with you?
Hi, Kelly Greer, head of sales at Galaxy. We're an institutional digital asset investment firm. We're publicly listed in Canada. We run mining and validator infrastructure, Avalanche included, OTC trading, derivatives, spot, and lending. And we have an asset management business that invests in seed-stage companies in crypto.
Thank you, Kelly.
Yep.
I'm John Darsie. I'm a partner and head of business development at SkyBridge Capital, which is a global asset management firm. Historically, we were a traditional asset manager, started in 2005. Today manage about $2.5 billion. And starting in 2020, we started allocating heavily into the digital asset space. So that included direct investments in token projects, which now includes Avalanche, among others. Also allocations to leading crypto funds, including some Galaxy funds. I'm also the CEO of SALT, which is a series of forums that we convene around the world that really primarily bring together global asset allocators and global asset managers as well as entrepreneurs and try to sort of accelerate the flow of capital into what we think are best-in-class asset managers and startups. So sort of wear two hats professionally and sort of accidentally involved in politics because of Anthony Scaramucci, my partner at SkyBridge, who had a cup of coffee in the Trump administration and remains very outspoken about politics.
It's a short cup of coffee.
11-day cup of coffee. I don't want to impugn him too much here.
Yeah. Well, let's, given both of your background, and obviously we are a few weeks away from the U.S. election, which is something that I think is the whole industry is looking at as some sort of either catalyst in one direction or another. I'd like to start there and just sort of, hear your guys' thoughts in terms of how, whether it's personally or at the firm, you're thinking about this election in particular and how it impacts the crypto industry. Kelly, we'll start with you.
Sure. Yeah. Arguably the most important election for the crypto industry in the U.S. to date, obviously. We do, so very, Trump, I think, is unanimously going to be very positive for the industry. He's promising a full overhaul of regulation. Super excited about what that means for institutional trading as it relates to tokens being able to list themselves as securities, the implications of that for service providers and investment into the space. But recently, Kamala has sort of de-risked in a way. She's lent herself to make some positive remarks about crypto, which, take it with a grain of salt, but it's nice to see and hope that it won't be worse than the Biden administration, which is what we've been telling our counterparties. So we view this election as a lot of asymmetric upside in the event of a Trump win, and hopefully better than status quo if Kamala takes the win.
Yeah, I mean, it's definitely a consequential election when it comes to crypto, but I think it's actually long-term, probably less consequential than it is in the short term. I think one of the big things that we've seen in crypto recently is Bitcoin dominance rising to all-time highs or multi-year highs. And I think one of the big things that you'll see if Trump wins is for that trend to reverse a little bit. I think Bitcoin is here to stay. I think globally in the United States, it's recognized as a commodity, and we have ETFs that are publicly trading and raking in hundreds of millions of dollars in flows regularly and things like that. But I think when it comes to sort of the next tier of projects below Bitcoin, Ethereum, which have sort of regulatory blessing now by accident or through legal means in the United States, but I think it will be good for other projects like Avalanche, like Solana, sort of these other chains that are battling for market share in that sort of next tier. I think it's interesting because I come from a family of hardcore Democrats. Anthony is a lifelong Republican. When he got into politics with Trump in 2016, me as his partner and sort of his de facto chief of staff in some ways at that time, I helped him a lot on his political efforts. And so I got to know a lot of people in the Trump administration very well and continue to be friends with them. So I sort of now have a front row seat to a lot of the work that's being done under the hood on Trump's potential policies around crypto regulation and things like that, whereas Anthony is now very much with Kelly's partner, boss, Mike Novogratz, in terms of trying to work with the Harris camp to make sure that they are not worse on crypto than the Biden administration, which would be very difficult. But I think you will see incremental improvement if Harris does win in terms of regulation. And I think long-term, crypto is inevitable. There's nothing that can be done to stop it. I think there will be maybe a short-term pause if Harris wins in terms of adoption of some of these, secondary projects in crypto. But I think ultimately it's not going to impact the long-term trajectory of the industry.
Yeah, I think I agree with that. It does feel quite consequential in the short term, but like you said, I think the innovation is sort of unstoppable at this point. Given that we talked a little bit about the landscape in the U.S., there are other nations that are taking a different approach, other parts of the world. Where are you both seeing, I guess, more activity and adoption outside of the U.S.? And to that point, what can the U.S. do to sort of catch up? And sort of make a little bit more progress.
Yeah. A lot of talent and energy has moved overseas in light of the regulatory actions and regulation by enforcement in the U.S. Some of that probably unwinds when the U.S. becomes more friendly, allows projects to register and all of that. Europe's doing great. MiCA goes into effect later this year, January. It's passportable across the continent. Which is a huge value add, allows companies operating in the space to follow a uniform code of law to interact with firms based in different locations versus in the States it's very fragmented state by state, different regimes for getting MTLs and things like that. And so the US has a lot of room to improve. We're hopeful that with things like FIT 21, stablecoin bill, all things that we're hoping we see come into fruition in the next year or two, improve that, bring talent, development, investment back to the U.S.
I think one place I would highlight is a place I was in last week and have spent a lot of time in over the last 7 or 8 years is the United Arab Emirates. Dubai to me feels a little bit like the center of the world right now. I think for a long time it was London. You could argue for a time it was New York. Dubai feels like the place where people are convening from around the world to work on some of the more exciting technological developments that we're seeing today. And one of those is around fintech and digital assets, where I think they're taking the approach that a regulator should take, which is a collaborative approach with the industry. It's not just a free-for-all. They're not opening up the gates and allowing everybody to do whatever they want. But in the United States, the regulators have taken an adversarial tone with the industry rather than learning. And you hear regulators and legislators talk about crypto, and it would be okay if they understood it and still were against it for ideological reasons. But it's very clear that the likes of Sherrod Brown and Elizabeth Warren, you hear them talk about crypto, they don't understand it, and they don't want to talk to the industry, and they demonize success. But in the United Arab Emirates, you see a collaborative approach with the industry. You see developers moving there. You see companies moving there. I was just at an OKX launch event where they became the first exchange to be fully licensed and operational under VARA, the Virtual Asset Regulatory Authority in Dubai, with traditional banking rails. Standard Chartered is now banking crypto in the UAE. I know BNY is being allowed to circumvent SAB 121 in the US, so steps in the right direction there. But you see companies like Custodia Bank in Wyoming, where we recently hosted one of our SALT forums, that are being sort of systematically rooted out of the Federal Reserve master account system in an arbitrary and capricious way. So I would highlight the UAE. Obviously, Europe is a place that, if we talk to a lot of people in the industry, that they are eyeing that market with the advent of MiCA. But UAE is a place that stands out to me right now.
And then, going, I guess, a little bit away from macro and sort of getting a little bit deeper into what you're seeing specifically in the crypto space, are there certain, I guess, verticals or parts of crypto that are more exciting than not? We're seeing a lot of excitement with DeepIn. There's still a lot of DeFi sort of projects that are interesting. You're seeing a lot of activity in the money market fund and RWA space. Where are you guys, I guess, leaning in the most or seeing opportunities these days?
Yeah, we were just talking about this before we came on stage. Being in Argentina, it's amazing to be here. Thank you for hosting us. Seeing the use case of payments and self-custody, like the first 3 lines of the Bitcoin white paper really in action and being put to use, is the use case in the product market fit. Just recognizing and appreciating that we've come this far and have a very strong PMF with stablecoins and self-custody is, it shouldn't be overlooked. Something I think is interesting is we saw a lot of institutional sort of allocator and pension adoption in the last cycle in 2021, just stepping back from use cases and looking at, allocation and reinvestment into crypto. I think there's some interesting sort of like market structure shifts that may lend itself back to crypto investment moving forward. Politics are helpful, but so allocators have fixed allocations to alternatives buckets, which crypto would be included in. It's things like commodities, real estate, energy, et cetera, that are fixed at around 30%. And so equities underperformed very severely in 2022, which put many pension funds overexposed to alternatives. And so you can look in some of their year-end filings from June of this year, and with the outperformance of equities recently, that gives them room to redeploy into alts. And so we saw a lot of firms and worked with them to build up and build their thesis to invest in digital assets from a venture and a liquid standpoint. A lot of that was put on pause post FTX, post the rising interest rate environment and changing capital structure and the liquid outperformance. All of these things are now shifting back in favor of investing into crypto. So we have monetary easing around the globe. We have regulation shifting in our favor in the US. And we now have allocators who have appetite and bandwidth to invest in alternatives again. So excited to see how that continues to drive forward all of the themes that you mentioned.
Yeah, as we were talking about before we came on stage, people are always talking about what the next killer use case is for crypto. And I think you have to sort of go back to the core of what crypto is. And the killer use case is money to start with. And as Kelly said, here in Argentina, other emerging markets, we as Americans tend to look at everything with a very American worldview. But you come to a country like Argentina or other countries around the world, and it crystallizes more in your mind about why this movement is unstoppable. Mike Novogratz at PubKey, I was at a speech that he made there with Anthony Scaramucci a couple months ago, and he talked about how crypto, Bitcoin and other cryptos, are really a report card on the responsibility of people in power and governments. And he obviously wants Bitcoin and crypto to go up, but he's also a patriotic American, and so he wants to see our government act more responsibly, reduce our debt, reduce our deficit. I don't know that that's going to happen. I don't think either one of these presidential candidates, I think Democrats from Barack Obama to Joe Biden now through to Kamala Harris, I don't think there's an appetite to reduce our deficits and our debt. I think Donald Trump has proven that he said it himself, that he loves debt and he loves using debt as a means to grow. We'll see if he's able to grow out of the current deficit. I have my reservations about that. But I think the first killer use case is money. And then I think if you look secondarily to that, you want to identify blockchains. And this, I'm going to give a little bit of a shout out to our friends at Avalanche here, which we are proud investors in and very bullish investors in. I think when you look secondarily at blockchains, is this a winner-take-all game, or is it going to be one where we have a multi-chain future? I think no matter where you stand on that, if it's a winner-take-all, you need a blockchain that is fast, that is cheap, that's reliable, and that's versatile. If you look at all the other sort of candidates in that sweepstakes, there are issues with one of those four horsemen, if you will. But I think Avalanche tackles them all. So if you talk about the rise of off the grid in terms of gaming, super exciting. People are playing the game and they don't even realize they're playing a Web3 game. That's when we know crypto and Web3 will have arrived, when people are using it without realizing they're using it. So I think gaming is really interesting. I think the rise of tokenized money market funds is super exciting. I interviewed Jenny Johnson, the CEO of Franklin Templeton, at our event that we did in Jackson Hole recently. And she's talking about they're not trying to build private permission blockchains. They're building on public chains, and they're pursuing tokenized money market funds and tokenized ETFs. And when you have a $1.6 trillion asset manager, among others, that are pursuing these tokenized forms of financial infrastructure, I think that is an unstoppable movement.
Yeah, I think, but people forget, like, if you think about 3 years ago, if I had told you that BlackRock, and Franklin Templeton and all these different firms would have money market funds on public chains, that we would have a game that's live with 6.5 million wallets, like, a lot of times we get complaints that feels like the adoption is not happening, but I think when you zoom out and sort of have a little perspective, there is actually a lot happening under the ground, and we are starting to see a ton of progress. I do want to stay with the chain thing for a moment, just because it's fun for me. There's obviously a lot of different architectures out there. You have the layer 2 movement, you have Avalanche with its layer 1 ecosystem, then you have the monolithic chains. I'd love to just get a quick sense on how the firms are thinking about the overall landscape. I think you gave a little bit of it, John, in terms of the multi-chain future, but I do think it's helpful for people to understand, like, at the core infrastructure layer of a blockchain, how you guys are thinking about, that from an investing standpoint.
Yeah, I think we view it in sort of a few verticals. Bitcoin is firmly in its place as a store of value, digital gold, very decentralized and distributed. Then you have, the modular ecosystems and chains, Ethereum being sort of the oldest, but there's lots of interesting new incumbents. Avalanche is a leader in that bucket in our view, and then you have the monolithics, and I think each chain now is sort of leaning into different types of use cases, different types of target markets, and so there's room for more of them. We've seen a lot of infrastructure investments this cycle, hoping we see more application investments. I think we're starting to see that in VC funding, and so seeing how these apps manifest in the coming years, off the grid being an amazing first example on Avalanche is going to be great to watch the adoption unfold.
Yeah, I mean, we believe in diversification. Yeah, we obviously are not putting all of our eggs in one basket in terms of, Bitcoin is the alpha predator in the space. It is the store of value. It is the strongest, most secure, most decentralized asset, and that is, the primary focus of our portfolio. We have a significant amount of capital in Bitcoin, and we have over $1 billion in the digital asset space generally. But I think if you look at the different possible outcomes in terms of what other chains will become the dominant players when it comes to tokenization of real-world assets or gaming or whatever it may be, I mean, we have our reservations about Ethereum, to be honest. We invested in the seed stage of a company called Kento, which is trying to build an on-chain KYC, AML compliant environment that allows people to transact, on Ethereum. But we're also significant investors in Avalanche. I think, again, if you believe that it's a winner-take-all scenario, I think Avalanche has as great of a claim to that mantle as anyone because of the reasons that I cited: speed, cost, reliability, versatility. I think someone like Solana, which we also have a significant position in, we love that team. We think the technology is interesting and good. I think the best thing they have done is their ability to build community and build a very vibrant developer ecosystem. And I think they're trying to work out some kinks in the technology, but we are believers in Solana as well. But we generally think it's going to be a multi-chain future, but I think you'll continue to see market share gobbled up by the likes of Avalanche, by the likes of Solana, if you talk about the sweepstakes against Ethereum.
Great. Thank you for that. I think we'll just, we have a few minutes left. I'd like to just talk a little bit about, kind of what you see going. Obviously we talked a little bit about the election, but, going forward into 2025 and in general, what you guys are thinking about for markets, market conditions in crypto, and how you guys are planning on allocating.
Yeah. So I spend a lot of my time in institutional OTC trading. And so I'm a little bit biased here. There's a few interesting developments that we haven't touched on yet. Listed options on the Bitcoin ETFs will be a big landmark for the industry. So right now, options are listed on Deribit, on the CME. Open interest on the CME is pretty small, but it's growing. And then you can trade with OTC venues. That leaves onshore retail and onshore investors with limited options in terms of where they can trade. And so as a result of that, the open interest share of the market cap of Bitcoin is only around 2%. In traditional markets like commodities, it's like 10 to 20x derivatives trade relative to the size of the asset. So there's a huge sort of, liquidity unlock that will come with allowing onshore capital into listed options. Alongside that, BNY Mellon, they custody 50 trillion in assets in the US. They're the backbone for the prime brokerage system in the United States. They just received an exemption from the SAB 121 rule, which seeing the progress there next year, watching them, the progress of custodying assets, how that manifests into allowing leverage into the trading ecosystem is going to be huge, right? So, there's not a lot of capital efficient ways to trade crypto at the moment. You can trade on post-trade settlement. You can take out, Bitcoin-backed loans from an OTC desk like a Galaxy, or trade on futures at 30% margin. But if you're a risk manager at a hedge fund, you have scarce units of capital that you have to allocate. Those are precious. And so now that you can finance and cross-margin your book through a PB is going to be huge. And hopefully, it should be a rising tide lifts all boats for, projects, investment, and firms that operate in the space.
Yeah, in terms of sort of the short-term outlook, obviously the election will have implications. I think the biggest thing to watch will be Bitcoin dominance. Again, Bitcoin dominance, I think, grows if Harris wins. Bitcoin dominance recedes if Trump wins. At SkyBridge, again, we were a traditional fund of funds, and we are still a traditional fund of funds. About half of our assets are in digital assets, and half is still allocated to best-in-class hedge funds like Millennium, Point72, Third Point, Brevin Howard, and others. But Anthony Scaramucci, he was in a conversation with Michael Saylor the other day. And the way we typically run our portfolios is we allocate to funds and to assets in a thematic and a concentrated way. So usually every 2 or 3 years, we identify a theme, whether that be activist hedge funds or structured credit, whatever it may be, and we allocate up to half of our assets to that theme. We obviously made digital assets that theme of choice starting in 2020. But as we think about, okay, how are we recycling our capital? We're looking around and saying, is there a better theme or a better idea right now than the birth of this new industry and the birth of this new financial market infrastructure? And Anthony was talking to Michael Saylor, and he said, well, I tell people, we talk to financial advisors and family offices and high net worth individuals, and we say, we think you should have 2% of your assets in Bitcoin or some digital assets. And so Michael Saylor said, okay, I respect that, but that means that you think there are 50 ideas that are better than Bitcoin. 50 times 2% gets you to your 100% allocation. Do you think equity markets right now, given current valuation, do you think it's a better idea than Bitcoin? Do you think fixed income right now, rates coming down again, fixed income yields still fairly paltry, but is that a better idea than Bitcoin and digital assets? So for us, we're probably going to stick with this theme longer than we generally stick with themes in our investment portfolio and our asset allocation. And Michael Saylor always gives a master class on the psychology of Bitcoin and why he thinks its rise to significant valuation is inevitable. But I just thought that anecdote was interesting, and it gets you thinking about asset allocation. I'm not giving financial advice and telling people they should have more than 2% or making any allocation to digital assets, but it's just interesting sort of intellectual exercise.
Yeah, I think it is interesting to see, especially given the advent of the ETFs this year, that people are starting to allocate. Have you guys seen, things that have surprised you on that front in terms of flows? Has it been, if I had told you in the beginning of the year or beginning of last year, that we would have a Bitcoin and Ethereum ETF, is it, sort of what you expected?
I think the flows were really strong. The most successful ETF launch ever, right, in a short period of time, 20 billion in assets in Bitcoin. Unfortunate timing for the ETH ETF. Midsummer, everyone was on vacation. No one's opening up their brokerage accounts. Some flaws with the products, right? No staking exposure. So it's tough to persuade someone who holds Ethereum to hold the ETF in absence of ways to use it and deploy it effectively. But I think they're a bullish force. We continue to see inflows into Bitcoin. TBD on ETH, and be great to see more ETFs on other chains, AVAX, to come.
Yeah, Anthony and I were in Abu Dhabi, and he's told this story publicly probably 3 years ago. And we were in the lobby of the Four Seasons Hotel in ADGM on Almeria Island, if you've ever been to Abu Dhabi. We run into Larry Fink, and Anthony, being Anthony, he knows everyone. So, hey, Larry, how's it going? And Larry says something like, oh, Anthony, aren't you involved in Bitcoin? You know, what are you doing now? Anthony's like, yeah, Bitcoin. And Larry's like, yeah, I'm not a believer. You know, something along those lines. The fact that Larry Fink is on CNBC, is on Fox Business, is on Bloomberg, as almost the #1 advocate for why Bitcoin is inevitable, I think makes it even more inevitable. I mean, I didn't have that on my bingo card at all when I saw him at the Four Seasons in Abu Dhabi, and I think you're going to see more like him. You have Jenny Johnson at Franklin Templeton and others out there explaining in a very cogent way why Bitcoin and digital assets are inevitable. So the flows have been, I think, better than expected. I think, not to rain on people's parade, but a lot of those flows are part of sort of hedging strategies at hedge funds and things like that. So I think we're just seeing the tip of the iceberg in terms of actual accumulation of Bitcoin on an institutional level, and you'll start to see more of that, whether it's sovereign nations, whether it's sovereign wealth funds, whether it's large family offices or pension funds or endowments. I think you're starting to see an environment where that will be more acceptable, and the career risk associated with making those allocations will have receded. And so I think we're just scratching the surface of what those ETFs will look like in a few years.
Well, we're basically out of time. This has been a really exciting conversation. I think one that really is timely. I'd like to finish on just asking one question, real quick one.
No price predictions.
No price predictions. Election prediction. Do you guys have a prediction?
Whatever Polymarket says.
Whatever Polymarket.
I know. I waffle on this one because it's been a roller coaster. Trump, after he got shot in the ear, it looked like he was a shoo-in. And then Kamala comes and has this honeymoon period where she's extremely popular and has a ton of momentum. I think that honeymoon phase has ended. And I think if you look at Polymarket or you look at some of the polls and you assume the polls perhaps underpoll Donald Trump as they did in 2016 and 2020, even though pollsters say they've fixed that bias, I think your money would have to be on Donald Trump right now. And that's my prediction, but we'll see.
All right, perfect. Well, thank you guys so much. I appreciate it. It was great having you here.
Thanks for having us.